In this video, I'm going to go over what the perfect Joule signal will look like, as well as a sort of guidelines that you can go to essentially figure out if a trade is worth taking or not. This is, of course, to be incorporated into whatever sort of trading plan that you already have. But if you don't have a trading plan or you just don't know where to start, then this will be a very, very good sort of beginner template that you can work off of and will actually perform quite well. So let's first discuss what we will reference to in the future, which is known as the perfect buy or sell signal. So the perfect signal is when we see all of the oscillators trading at a specific level in a specific array. This would be an example of a perfect buy right here. What we want to see on a perfect buy is we want to see the fast moving oscillator above the slow and the slow above the high, all around or as close to the critical zone as we can see. In this case, this is a very good example of an hourly beautiful buy signal. And let's see what happened on price action after this was printed. Well, you can see price generally had a nice little bounce. Bounce did fail, or actually, well, bounce is failing now, but of course, you know, that is about a week later. This is an hourly time frame for reference. So this perfect buy signal right here, given the impetus for a pretty powerful bounce actually. In percentage terms, this was about a 4.25% bounce after a pretty nasty downwards movement. In fact, just paying attention to the perfect buy signal here would have let you know that throughout this whole downside movement that there was really not any great lows to be buying there. There was never that perfect, beautiful array of these oscillators around this critical zone until this moment right here. We can find another example on top of that for what would be considered a perfect buy signal. Now, this one is coming right here, where we do see, again, all three oscillators around the critical zone. They all bunch up around each other, and we can see that the fast bounces off the slow, and the slow bounces off the high. And once I get that perfect array on this red vertical bar here, actually it happens technically right there. That is where price is putting in a low before it does put in pretty significant move to the upside over the coming days. Actually, this one taking about 4 days to move up 14%. The reason why I showed this one right here first is because I think it's a little bit more obvious, I do think. But ultimately, we're looking for that array around one of the critical zones. That's what we're looking for. Now, for a perfect sell signal, we're looking for the same thing, just on the opposite side of the Joule spectrum here. So I'll bring you to an example I don't know, do we have one right here? We more or less have one right here. This would be an example of a nuanced one. Perhaps it's best that I don't start off with a nuanced one. So what I'll do in this case is I will go find a perfect one, and then we'll go back to the nuanced one. But let me actually mark this off for later viewing. Okay, there we go. All right, let's go find a perfect sell signal. Yes, here we go. Okay, so in this example, we actually have a couple of perfect examples or near perfect examples with a perfect example. They're right here. So again, we are around the critical zone, all three oscillators. The fast is below now the slow, and the slow is below the high. So once we see that happen around this area, we want to be near the trigger. And for this particular one right here, which I'll mark off right here, we can see that the slow and the high still kind of have positive slopes there, which does matter. And we can see on price action that, look, I'm not going to ever tell anyone that if you sold right here, this was a bad trade. Hell no, it was a great trade. But in terms of timing, waiting for the perfect setup was actually right here. And in fact, you could have traded this multiple times. I mean, this was a pretty significant move very, very quickly, but 5% move right here almost immediately, and then followed by the real top soon after that. But the reason why this one right here is perfect compared to the other one is because we see that there is more of a sort of more of that like buoying that's what I'm trying to say, effect between the fast, slow, and high, where they're kind of resisting each other and spread out a little bit more. Doesn't always need to be like that, but in this case you can see that this was certainly like the top, quite literally. If we would have waited for the color change, which was right here on closure, we'd have entered in a little bit later, but again, hindsight analysis, this would have been completely fine. Just an added sort of marker there to be going off of. Now let me go back to this prior example right here. This is an example of a nuanced one. Was it this one? Oh, well, that one as well. Actually, let's go over this one right here. Okay, so in this particular instance, we see that the fast, slow, and high are all around the critical zone. Yes, so we have that. What we do not see is that the fast is not below the slow, nor is it above the high in this region. Now, this will happen, and these can be very, very good signals, actually. Keep in mind that even when both the slow and the high are around a critical zone like this, well, and the fast as well, those are general indications of that move likely nearing its sort of climax, or at least about to go into a consolidation phase. And so the fast moving oscillator, technically it's not until it actually goes back down below the other two on a closing base, which is right here, where that one would turn into a perfect signal. But again, this one, not bad, especially going onwards and forwards from there, producing a pretty nice, almost immediate move, about 6%, and then having more continuation on later on, of course. So you will notice that as well. Now, another version that is not as powerful as the sort of signals that we just spoke about right here, but still very, very powerful, but not as powerful, is when you see that same sort of array at around one of these major, let me pull back over here, around one of these major horizontal marked off regions, the 61.8 level and the 38.2 level. If you see them turning down around this region, all in that specific array that we spoke about earlier, it's probably going to be a good sell signal, and vice versa for an upside signal right here at the 38.2 level. Curious if there's actually any really good examples on the board right here. We do see some of them kind of turning around. Actually, a pretty good one right here, in fact. Let's actually highlight this one because it will look a lot of the time like this, where you see them kind of get pulled into each other and then spit out around this region. They might not be as perfectly aligned as we spoke about with the perfect signal, but these still, these are still very, very powerful. I mean, I don't think we need to argue too much about this particular one right here, calling the high around $47,000 and quickly marching down below $40,000 after that. But technically speaking, those are not as good or as high probability as the ones that we spoke about before that. Okay, so now I want to bring you over to this infographic here. Feel free to pause the video and screenshot this or write it down or whatever. This is for you, of course. So, and of course, you don't have to take it as well. But these are some general guidelines as to how to use the Joule. Again, if you have your own trading plan and you want to incorporate it that way, by all means, go for it. But if you don't know where to start, or if you're looking for some pointers, this is a good thing to kind of keep in mind here. So basically, for the Joule, we are most interested in taking a trade when a trade scores over 70%, or basically the higher the better. But 70% is a pretty good sort of marker there. So first things first, we want to identify the macro trend and trade with it, or even just the trend on that time frame. So in this case, you obviously need to be able to understand how to define trend. Obviously, higher highs and higher lows is going to be your uptrend versus lower lows and lower highs, which is your downtrend. If you are not comfortable or familiar with that, you could just employ an exponential moving average cross. That is why I do use the 21 versus the 55 EMAs. It's kind of like a it's kind of like a best fits for trend. It's not going to be perfect. It will get things wrong, but it'll mostly be on the right side most of the time. So generally, the idea here is that if the trend is, let's say, to the upside, we want to prioritize signals on the jewel that are on that same side. So, so when the trend is up, we want to prioritize long signals, and vice versa for when it's down. All right. The next one, supporting resistance or patterns. Now, I'm not a humongous fan of patterns. I think really patterns just boil down to trend anyways, but supporting resistance is certainly something that can be used in conjunction with the jewel as well. If, let's say, price action is nearing a support region and a long signal just fired off on the jewel, that is going to satisfy that criteria, and vice versa for a short signal around a resistance. If you see a short signal around a resistance, that's a lot more likely to play out, and we'll assign that 15 points here versus trend, which is 50, which is, should illustrate how important trend is. Okay, moving on from there, we can look at the perfect jewel, the perfect jewel signal, or how perfect is it? We went over some examples earlier, and how to kind of prioritize those and what those will look like. If you get the perfect jewel signal, that's going to be worth 35 points. So already, if you have the perfect jewel signal and it's on the same side of the trend, that's an entry. I mean, that's 85%, right? So again, those are going to be the ones that move the needle the most, of course. Okay, let me just read through here as well. Review the high term time frame jewel and look for signals building up. Keep them on your radar and wait for them to confirm before making your move. Yes, there is no need to front run the signal, especially not on the high term time frame. The confirmed signals are much more powerful and cleaner. Yes, so just a reminder to reference higher term timeframes as well, just to see if there's a simultaneous signal of the same kind, like two long signals, one on your current time frame and one on a time frame that's higher than that. And if those are both aligning with each other, okay, we will consider that confirmed. Okay. And then yes, use the lower term time frame to get your entry. Yes, we know that. And then, of course, for a continuation jewel signal, let's talk about what that would look like. That would actually be when you get a long signal, typically around the 61.8 level, or a short signal around the 38.2 level. And let me just see if I can find one really quickly. See a lot of reverse signals around that region, which certainly does happen. You will see continuation signals as well. Let's see. Well, in this case, we could easily say that if you are in an uptrend and you see a signal around the 38.2 level for a long trade, we're gonna look at that condition as fulfilled here. So 25%, we're gonna assign it 25 points. So if you see uptrend plus that jewel signal in that region, okay, we take that. And then, of course, the Fibonacci jewel signal, well, that actually refers to what we just spoke about with both the 38.2 level and the 61.8 level, but it's direction neutral. It's not really assigning a direction for that. And, of course, that's going to have the lowest or among the lowest prioritization here at 15 points. So, if you see a jewel signal, let's say it's an upside signal at the 38.2 level. Okay, then that is going to be solving that criteria right there. It's a continuation signal, as we refer to it, around a Fibonacci level, but not, it doesn't necessarily need to be like fully perfect. Of course, we can read through the different pointers here. We want to identify the macro trend and trade with it. We want to mark off our levels and use these to manage risk and take profit. So in that case, if you're using horizontals, for example, to manage risk, we want to mark that off before entry. And that is what we can use on a closing basis to define if the trade is essentially a failure. Yes, we went over this. Review the higher term timeframes related to the time frame that you're currently looking at. If signals are building up there, you're very, very likely onto something. Like, it's probably going to be a more powerful signal is what this would imply. It's just going to have a greater degree, being that it is a higher term time frame. But this, again, is not a call to front run the signal, especially not in a higher term time frame, because obviously those are going to take longer to play out. And as we went over earlier, they're very, very powerful on their own anyways, so there's no real need to front run them. We can switch to a lower term time frame, of course, to get our entry and manage our risk. The best trades come when the low term time frame agrees with the higher term time frame, which is precisely the point of really the essence of the jewel, which is using these slower moving oscillators in conjunction with our fast one, which gives us a look at sort of that higher term time frame momentum. But of course, even just going to other time frames is going to exponentially reinforce that behavior, anyways. So from there, we will enter after we get our confirmation of the signal and use the high or low of the previous candle as your stop. Now, this is a very generic or basic way of doing things. You don't have to do it that way. But again, sort of like a beginner-friendly way if you're just completely unsure of any other way to do it. Personally speaking, I do think there is actually a decent, also beginner-friendly way to do things, which is to put this indicator over here on your chart. It is called the support and resistance Lux Algo indicator. If you just type in support on the public library, it'll pop up by Lux Algo. It's called support and resistance levels with breaks by Lux Algo. It's got close to 21,000 likes as of the recording of this video. And I'll put it on my chart right now so you can see what it looks like. It'll plot these lines in the background. So let's say that we took, or we're looking at this sell signal right here. What we would do is we'd say, hey, our risk management is going to be if price closes on this time frame above the last most recent resistance line that this indicator has plotted. So you can see here it'd be at $72,000. So yeah, there's some risk involved. And again, this indicator is not going to be fully perfect. It's going to be pretty good. It's going to get things most right most of the time, but it's not going to be perfect all of the time. Same thing for this example right here. Again, perfect sell signal. We take the most recent prior resistance signal on this indicator and we say, hey, any sort of a closure on this time frame, not just a wick, but a closure above this region, and we're out. We take the loss. Okay. And of course, taking profit slightly before your next level gets hit. So that's what it says on the little generic template right here. When it comes to profit taking, you can do it multiple ways. You can do it when the fast oscillator hits the next major fib, when it hits, even the fib after that. In this case, for a downside trade, we could say the 38.2 level. You typically will get somewhere down around there. It really depends on your sort of preferences. Like, do you want to be a very sort of active scalper? Do you want to be in and out taking relatively smaller trades, but a lot more frequently, which can certainly add up and be very, very profitable long term? Or do you want to go for kind of more of the home run? Now this, obviously, when it does hit, it's going to be a big fucking hit for sure. But that doesn't mean it's that, or just by the nature of it being a home run, it is a lower probability. So personally, I like to get in and out quicker, set myself up for later for another opportunity rather than hold on to something which may or may not come. In general, when the money's in your hand, close your hand. So in this case right here, we can see that this trade goes on for a very long time. I mean, this is a $10,000 trade right here from top to bottom on the 4-hour time frame. And the fast moving oscillator gets close to the critical zone actually. I don't think that it's wise to be waiting for that always. I think taking taking at least some profit at some of these major horizontal regions here is wise. Or if you are more of a price action trader, you could plot horizontals on your chart as well and do it that way and take it as price hits your levels. I mean, that's completely fine as well. But if you're just completely unsure of what to do, or if you just want everything to be on the jewel, an easier way of doing that is just looking at these horizontal bars here, take some off around these regions, maybe even take all of them off. I'd say I want to be taking pretty much all of it off at the 38.2 level on a short trade, pretty much always, and vice versa for a long trade. If I long down here, I want to be taking off most at the 61.8 level. Almost always. And yes, there will be outliers where things, trend a lot more above or below those levels. But they don't happen as much, obviously. So it's not as high of a probability play. Okay, so that will do it for this one. Of course, with the Joule, you could also have in the fib and the God mode alert. And if you see these far off as well, this can be a really, really good indication of something to pay attention to. Again, another sort of highlight that you can use to bring attention to like very high probability setup. So when you have this background alert, the God mode alert signaling red here, plus a perfect Joule sell signal, look, that's going to be a big trade most likely. And this one certainly was a big trade. In fact, he even got that continuation sell signal right here. And this was actually really the big one, to be fair. This is where things really started to fall apart for price action. Before that, you would have entered over here, and price tested into that region a couple more times. Did not close above that region, to be fair, but it did test into that region. So thinking in terms of timing, those continuation signals actually can be very, very powerful. And this is a great example of one right here. Although not all of the oscillators are super close to the 61.8 level, you get the idea. They're getting that sort of secondary rejection in that perfect way. The DMI, as you can see in the background here, it does follow through later on. I find that the DMI is generally good for those continuation signals. As you can see in that example, doesn't always work out like that. But the DMI will be very appropriate in a continuation signal like this, as you can see, where we see all of the major oscillators coalescing around the 61.8 level. You see the fast move above the slow move above the high, and the DMI is green the whole way through. And as you can see, price action, from that point goes from here. I mean, it goes all the way up here ultimately, but has a pretty nice move from basically 53,000 to 63,000 or 64,000. So another sort of unique way that you can apply these tools. Anyways, I think that's going to do it for this video. I hope this one serves you well. And with that said, take care.